All right, today we're diving headfirst into the wild, high-stakes world of decentralized finance. DeFi. It's this place of just incredible innovation and, honestly, mind-boggling potential. But it's also a digital Wild West completely shadowed by some immense risks. So, which faces the real one? Let's get into it.
And that really is the billion-dollar question, isn't it? Is DeFi this golden opportunity, the next logical step for finance, a way to build a more open and efficient system for everyone? Or is it just a dangerous, high-stakes casino where the rules are literally being made up as we go and entire fortunes can just vanish in the blink of an eye? So to figure that out, we really need to get a handle on what decentralized finance, or DeFi, actually is. At its heart, it is a seriously radical and ambitious idea. What if we could rebuild the entire financial system from the ground up, but this time without the big banks and brokerages acting as gatekeepers?
Now, the magic behind all this is something called a smart contract. The best way to think about it is like a digital vending machine for money. It's an agreement where the terms are written directly into code, and it all runs on this public ledger called a blockchain. This is what lets you do things like lend, borrow, and trade directly with another person without some big institution sitting in the middle approving everything and, taking their cut. It helps to see how it's all put together. It's really built up in these distinct layers, kind of like a digital skyscraper. Right at the bottom, the foundation, you've got the settlement layer. That's the blockchain itself. Think Ethereum. Then sitting on top of that is the asset layer, your cryptocurrencies and tokens, the stuff that has value. Next is the really crucial protocol layer. This is like the building's plumbing and wiring. These are the smart contracts making everything happen automatically. And then right at the top is the application layer. That's the part you actually see and use, the app on your phone.
So with that architecture in mind, let's look at the first phase of DeFi, the incredible, almost infectious optimism. And this isn't just a little hobby for tech enthusiasts anymore. No way. Major, serious financial institutions are starting to lean in, and they're really intrigued by the sheer potential for innovation and, let's be honest, for profit. A recent report from Coinbase Institutional pointed out a few powerful forces, or tailwinds, that are pushing this whole space forward. And yeah, sure, there's a lot of capital or liquidity sloshing around, and the bigger economy has been pretty favorable, but what's really interesting are the bottom 2 points. We're starting to see more regulatory clarity, which makes the space feel less risky, and that is unlocking a huge wave of institutional demand. The big money isn't just watching anymore, it's starting to play. And this sentiment from Coinbase, they're a giant in this world. It's really telling. Their official position is cautiously optimistic, and they think the bull market has more room to grow. When a massive, publicly traded company that serves huge institutions says that, it's a pretty powerful signal that the professional finance world is taking this all very, very seriously. And you can see that seriousness right here in the numbers. This isn't just talk. We're talking about real, significant capital flowing in. These digital asset treasury companies, which are basically just firms that hold crypto on their balance sheets, now own 3.5% of all Bitcoin in existence. That creates this huge, steady source of demand, which helps prop up the whole market. But for every one of those optimistic reports, there's a shocking headline. And now we have to turn and look at that other, much darker face of DeFi. Because for all of its incredible promise, there is a hidden cost to operating on this frontier. And it's a cost that goes way beyond the flashy multi-million-dollar hacks you read about in the news. The headline number alone is just staggering. Over 10 times billion dollars has been directly stolen in different DeFi crimes. We're talking hacks, exploits, you name it. It's a massive, massive figure that, rightly grabs attention and makes anyone, especially a big institution, stop and think twice. But here's the thing. That $10 billion, as huge as that is, might just be the tip of the iceberg. What about the damage you can't see? What's the real cascading economic cost when one of these platforms gets hit and all that trust just shatters? And this is where it gets absolutely fascinating. Some groundbreaking research has actually started to measure these indirect costs. Now, this isn't the money that gets stolen from the vault. This is the value that just evaporates. It vanishes from the project's entire market cap in the hours and days after a crime as terrified investors just rush for the exits. The numbers are just wild. Get this. In one study that looked at just 22 specific crime events, the indirect loss, the hit to the market value, was estimated to be over $1.3 billion. That's value that just disappears into thin air, and it hurts every single person holding that token, even if their own money wasn't directly stolen. Wow, this chart just puts it all into stunning perspective. The direct losses, the money that hackers actually got away with, that only accounts for about a quarter of the total economic damage. Nearly 3/4 of the damage, 3 times as much, comes from the indirect loss in market value. The hit to a project's reputation is almost 3 times more expensive than the theft itself. It's incredible. And this comparison to the traditional world really drives the point home. When a normal, publicly traded company has a data breach, its stock usually drops about 3.5%. But when a DeFi project gets hacked, its token plummets by an average of 13.5%. The market's reaction in this new frontier is just so much more brutal and unforgiving. So this extreme volatility and this catastrophic risk is exactly why we're now seeing the next big chapter in the DeFi story unfold. The regulators are showing up. Governments all over the world are finally stepping in to try and bring some rules, some order to this digital Wild West. You can see just how fast things are moving by looking at this timeline from Europe. From formal proposals for a digital euro to the steady rollout of technical standards, the pace is really picking up. This isn't just talk anymore. It's a serious, concerted effort to build a real legal framework. And hey, make no mistake, this isn't just a European thing. This is a global movement. Canada is creating special rules for trading platforms. The UAE is working with central banks on digital currencies. Taiwan's introducing new guidelines. All around the world, authorities are racing to write the rulebook for crypto. Okay, so where does all of this leave us? We've seen these two totally distinct faces of DeFi. The promise of a revolutionary new financial system on one side, and the peril of a lawless frontier with just devastating risks on the other. Let's try to bring it all together. This really highlights that core tension perfectly. On one side, you've got this groundbreaking innovation, big money finally getting interested, and the slow but steady arrival of regulatory clarity. But on the other side, you are facing brutal volatility and the constant threat of hacks, where the fallout, as we just saw, is so much bigger than just the money that was taken. This is the fundamental conflict right at the heart of DeFi today. And so that leaves us with the ultimate question, doesn't it? As this new digital frontier slowly gets mapped out and tamed by rules and regulations, can it ever get to a point where the immense rewards of this technology finally and truly outweigh its profound risks? That, right there, is the billion or maybe even trillion-dollar question for the entire future of finance.